Welcome to Stock Odds Odds and End podcast post Thanksgiving edition. We have to get our brains back into trading.
Sounds like you ate too much turkey. Well, you're still gobbling. Well, yeah, here we are on a Sunday doing this again, but I'm glad that you got a chance to join us here this weekend. You were off last weekend, so we can give you a weekend off. That's good. Let's see, SPY daily. What do we got? So we can see that we had a inside day on the half day, right? Very, very small range, very sideways, very choppy. So we didn't have much to really go on there with the SPY. And you can see that we're sitting just below the July highs. The way it's been creeping up here, I mean, Monday was a big burst to the upside. And before that, of course, we had our jump on CPI numbers and stuff. But it's just kind of been creeping up. It just looks like there's a magnetic draw to this July high. So I kind of lean towards it wants to test it. Usually the week following, Black Friday, isn't like a rollover completely type of week where things just tank. It's usually still supported by the November seasonality backdrop and then the expectations for December. So if you're trying to bet on it, just dropping into the abyss because it's gone up so much, I would tend to change your thinking a little bit to looking at the slope and maybe a discount along that slope, but not necessarily falling. It's always a trader's problem mentally that they look at how far something has gone, and so they go high minus low instead of looking at the slope and looking at premium or discount along that slope line, like linear regression or something. So I think that the probability is it wants to go and tackle that previous high, and we're so close, right? Makes sense. See what happens then. And it's not that we can't get some kind of a drop or a speed bump in December. It's definitely possible. We've had it before. Back in 2018, we had a substantial drop in December. I think in order to knock this down, it's going to require some kind of a catalyst. And yeah, we're always vigilant to watch for that. And sometimes there's surprises in the market that can't be predicted or forecast or even thought about. That's why they call them black swans sometimes. So we're, always vulnerable to that at some point. But all things considered, with the VIX dropping and the slope that we're on, I would say that we want to tackle that high. Now, with the Qs, they've already exceeded that high we had in July, which came a bit earlier than the S&P did in the month. And now we broke above it, and we're kind of chopping around a little bit as some of the mega caps, took a little bit of profit taking off the table and just a little bit more concern. And we'll get into some other data here shortly that shows that the breadth of the market has increased and the mega caps have softened a bit. So the Qs still above this former resistance got broken. So could it become new support? It's definitely possible. This is the sector performances for Friday and for the week. On Friday, we could see a bit more of a defensive posture, and that showed up in our risk off list. It performed much better than the risk on list. And so communication services was down at the bottom, and even tech was down there as well. So healthcare, which is in our defensive list, and consumer defensive, obviously in the defensive list. We don't have energy in there, and energies was at a pretty good Friday, which was a half trading day, of course. And for the week, it did really well. So there you have it. It was a green week for all of the sectors on the broad sector side of things. Looking at our ETFs, here's the market ETFs and then the sector ETFs. We can see they were also green. The standout was, of course, energy, XLE, and then followed by XLV healthcare. As far as the four horsemen here, it was IWM that came. So we had some positive sentiment concerning small caps again that swung into play. And of course, Monday was one of the bigger days for that. And it still held up reasonably well for the week. And Q's was beat out by the SPY slightly there. Okay. I wanted to point out as well this relative volume. Look at these relative volumes, how bad that was on Friday. This is a snapshot from Friday. You can see the fumes. So, had some traders kind of complaining about how choppy and, lack of the market doing anything. Really pay attention to what type of day it is. How's the volume doing, things like that. And don't strive to make something happen if there's nothing happening. Just walk away, do something else. Don't take unnecessary risk and try to make something happen. Sometimes on those types of days, again, it was a Black Friday, you got maybe nothing to do, don't want to go shopping or whatever, you don't have anything going on. And you got time, so you sit down and you try to make something happen. And that's not the way to deal with the market. Okay. Trade what you can, when you have an edge, and don't trade if you don't. Here's the map of the market for the week. We can see that the mega caps got a little bit softer, and we can see the broad market kind of kicking in a little bit more. But there were still some, earnings standouts here and there. And anyway, you have a pretty good splattering of some red through every sector, but energy, of course, was doing the best, and Exxon is the biggest in the XLE, followed by Chevron, and so that has a outsized influence on what happens with the energy ETF XLE, as well as in healthcare. We got Lilly and Johnson & Johnson, Pfizer, again having outsized influence on the XLV. So that's and consumer cyclical is XLY is often about what Amazon and Tesla are doing. So even though we have a lot more components, but outsized influence again. So here's seasonality for ETFs, last 5 trading days of November. And the last 5 days actually started on Friday last week, but such a light volume half day that I think any influence from these last 5 days would be pumped into these 4 days of this week, of which probably the first 3 are what really matter, because the 4th day is actually the last trading day of the month, and we'll look at that shortly. So what do we see here, Dave? Anything jump out at you?
The big risk on day. I mean, got your NASDAQ kind of stuff, long communications, discretionary long, and stuff that's shorter is really defensive. So it's just, and that last 5 days is really robust. It's the biggest time this entire month. So especially with
it is, but then it drops off on the last 3 days. So it's like it should really be clumped in the first part of these 5 days. So I would think, it could be partly because of what tends to happen around this seasonality with shopping, Cyber Monday, things like that. And normally the consumer has been supporting the market, even during COVID, and we saw some great numbers and great support, a lot of online shopping going on. So I thought it was tapering off this year, like it was going to be worse for sales for Black Friday and possibly for Cyber Monday too. But we'll see what the numbers really show and how the market responds to that. So going to a historic perspective, we should have a good start to the week. Now that would be the probability here, is that there's more components for discretionary communications, technology, so the Qs, ARC Fund, UPRO, all this stuff, showing you that and there's a risk on type profile here, as Dave said. So that's the ETFs. And we're going to look then for symbols that might have really robust opportunity for these 5 days. Because again, this is the performance here, the percentage for the 5 days. So we want to find things that have some excellent opportunity, and maybe they'll do it in the first couple days of this week. So let's roll to the symbols here. So we see Etsy, in the retail again, Roku retail, got Tesla, AMD. So, semiconductors, again, all risk on type things. And on the other side, you have American Barrick, Alcoa, so some basic materials weaker, Schlumberger, oil, after, and that's the thing, after a really robust week for energy, there may be an opportunity to pull back, but the odds are only 50 on that, so it's not huge, but it could still be a hedge. The thing is, I think there was going to be some discussion this week coming up with OPEC and more cuts, trying to find a way to support the oil prices that had fallen from levels that they like to have the oil at, of course. So there might be something that interferes with a trade like that, but Alcoa, GE is kind of a boring stock, and that might be a good hedge. And again, if you want to go to the seasonality calendar and slide the slider slightly, it can change the view and bring in some of the higher volume, or just isolate it to the higher volume stocks. This is what I did here with changing that volume. And you can see that I pulled in more of the bigger names that trade higher dollar volume. So this is in volume in millions here, like higher dollar volume, higher shares, maybe more expensive stocks, just more in the vogue kind of thing. So Tesla, AMD, UNH, NVIDIA, Adobe, all these are slated to have pretty good performance for the week, and on the short side. And it's sometimes like that, Dave. It's hard to find good shorts, right? It just is. So you could use ETFs if you can find some stocks that might have alpha over the market, and use the market ETFs or the sector ETFs, because the sector ETFs are still statistically muted because they're made up of the symbols by weight. So if you can find something that's expected to exceed it, then you've got a good working relationship there. And this is the seasonality for November, last day for ETF. So this is the last trading day of the month. And do we see a theme that's similar? There is some overlap, but you also see some moving from this side over to this side. Some of the basic materials components. You see XOP, SLV, right? So some are moving over here. So this is a bit of a blend of risk on and defensive. And over here, you've got some of the country ETFs like EW Zebra, Brazil, Japan. You've got utilities, regional banks. So over here, it's still a little bit more of the defensive stuff, and maybe a bit of a blend as well. So you can see that change happening from the 5-day projection. Now we're actually still within those 5 days, but we're focused specifically on the last trading day, so the 5th day. And this is already declining in its bullishness, so keep that in mind. And then the stocks, I mean, GE still showing up here on the short side. So look for something that's persistent for the whole 5 days. That could be a way to focus. And Roku still showing up on the long side here. NVIDIA still showing up on the long side. Now, NVIDIA had a pullback this last week slightly, so there could be, it bouncing back. And semiconductors at large have been showing up on this side, which makes sense. They're more risk on anyway. Shopify, that's going to play how the retail sales go, same as Etsy and stuff like that. Apple, even that, with the Black Friday sales and whatever. So this last trading day for the stocks, you can see again 332 symbols and pretty balanced between long and shorts, but you can still see not just the bullish decline overall, but that it's still skewed to the risk on side. Okay, so this percentage down here just shows you what is the landscape for things moving up versus down. And then, you have to look at what the makeup of the longs are versus the shorts in order to get a real good feel of it. And now we roll into seasonality for December, the first trading day. And for ETFs, it's not super robust. It's not as strong as like when we rolled into November. It's a much more bullish first day through first Friday. And actually, you could go and include the first Friday. We should look at that too, because the first trading day is a Friday, if I'm not mistaken. Yep. So the first Friday of the month and the first trading day of the month are, in fact, the same here for December. So could be something to that. Go compare notes between the two and see what you come up with. I only have in this presentation, I only have the first trading day of the month. So I'll let you go look for the first Friday on your own. But this is the ETFs. And so like the last trading day of the month, we saw GDXJ and GDX there. So this has got some exposure to basic materials. And then we're seeing ARC kind of come from the 5-day over. Now it's changing direction here a little bit, but the odds of going down are not high. So I would put less weight on that. A little bit more weight on the SOX maybe. So we're supposed to have a good run earlier in the week for semiconductors, and that could roll down on the Friday, the first trading day of December. Okay. And let's go to the next slide here. We've got first day for stocks. Now Roku is flipping over to this side, 66.7% chance of being down. I like that. If it does actually perform according to the last 5 days and even the last trading day of the month, and then it flips for the first trading day of the month, that could give you a really good starting point for a short like that. Trade Desk as well was on the other side. Now it's over here. So yeah, just take a look and compare the last 5 days and the last day to the first day and see if you see any reversals. Okay.
What's interesting is the spider for the month of December. It's down 0.25% usually. So all this talk of Santa Claus rally, this and that, the whole month usually does minus 0.25%. So it is a weak kind of month.
It is a weird month, and I think 2018 did sort of impact that a lot, and also probably 2022 with a down month with tax loss selling, and I think those 2 months have sort of altered the data that we used to have, which is why it's important to stay pretty relevant, getting not just focused on 1 year, but like looking at a number of years. This plays out, but can you see how the 2018 and 2022 made a big difference to December's performance, right? Yeah. So here's the Russell. So we had that big, up day on the CPI numbers, and anyway, we've ended up kind of going into a bit of a flag formation here. So this is going to be interesting. It's getting compressed to see which way we break out of this, up or down from here. And anything's possible, and we don't know at the moment. But you could look at, again, seasonality for some clues. You could also look at some of your indicators going into the web screener and specifically looking for IWM and how it's going to perform over the next 3 days, the next 5 days. And that might give you some insights whether it's more likely to break to the upside versus the downside. So if you're prepared for it, that could certainly help. And normally small caps do fairly well in November, and usually one of the better months for it. This has been, pretty good performance for the Russell, as you can see where we come for the month. And December is usually supposed to be okay too, not as strong, but yeah, go get your numbers on that and see what you think. The 10-year note did taper off a little bit this last couple days, and that's just, there was a lot of enthusiasm for this potential rate cut starting in April or May, and a little bit more kind of reality was setting in, I think, to say, well, the Fed is still data dependent, and inflation could kind of cycle back around again. So they may not do that cut, or they haven't said for sure. They haven't said we will never raise rates anymore. They haven't said that. They've just said that they're data dependent, right? So there was a little bit of tapering off on the 10-year, which increases yields. Here's the US dollar. It's kind of sitting right on that 200 MA. And that's a kind of an important level, just kind of smack in the middle. This is what I refer to as mean reversion, not just going to a moving average, but I mean, like where it has, where's the middle point of all these trades, right? And it's kind of stuck in the middle. So it could go either way from here. Crude oil, again, this is going to be dependent on what happens with OPEC. And energy did really well in spite of crude oil pulling back for a few days here. This is the VIX. Dave and I talked about the VIX declining and continue to expect that decline, and possibly getting even much lower by April of next year. And that's when we often find it at its lowest point year over year is sort of in the April-May timeframe. And it's possible that it gets even lower from here. So why is that in spite of all the world's problems? Well, because of the use of AI algorithms, information at large, lack of maybe as many individual traders and more just institutions kind of doing the same thing. They haven't really seen a big need for buying puts to protect the capital. The sentiment's been good. Market's been bullish because of the strength of our markets and the liquidity of our markets, which has been declining, but still, compared to other world markets, very attractive. And world and other countries invest. So we're just seeing a decline in the VIX. It will probably take some kind of a major surprise or catalyst to pop it back up. So I wouldn't be sitting on, positions like VXX and fighting that decay, waiting for it to decline or to pop back up, if in fact the path of least resistance is still down at this point, based on the seasonality and all that. So yeah, kind of like we were talking about with the SPY and the Qs and, the market rolling over and dropping from here, it's more likely going to take something to set it off. So in order to get a rise out of the VIX, you're going to have the same requirement. So over to you, Dave, with the economic calendar here.
Yeah, there's a couple of themes this week. One is housing. We have new home sales on Monday, and the Case-Shiller home price index on Tuesday, and the consumer confidence on Tuesday. So we'll get a glimpse as to how the consumer's holding up and the effects on housing, especially since the interest rates have come down a bit. Then there's a lot of Fed speak. Again, that seems like they keep...
Again.
I don't know how often these guys have to talk, but There's a lot of Fed speak on Tuesday. And then Wednesday, there's an important report, the Fed Beige Book. The Beige Book is they compile a report where they interview people from the different Fed branches and other key business people, right? So they want to get insight into how the economy is doing. So we'll get that on Wednesday at 2 p.m. Eastern. And then there's like personal spending, of course, PCE, some inflation data on Thursday. Again, Friday is more Fed speak and some manufacturing data. So I think the key thing is Wednesday, 2 p.m. that we'll get that Fed Beige Book and we'll see what they're thinking about the economy. If it's too hot or not, right? And then in
Yeah,
terms of
I mean, overall, there's nothing like shell shocking this week that would, make a big change. I think, we'll probably see somewhat of a grinding type market still with lower volatility. But I mean, even the PCE could move it pre-market. ISM could move it at 10 o'clock on Friday. I've seen that moving before. So, but again, who knows what any of these Fed speakers are going to say. And that's going to, it could be one little slip, one little word, and all of a sudden, hey. So.
And in terms of earnings, just a couple.
Yeah.
There's Dollar Tree on Wednesday.
Okay.
Salesforce is a good one. And then on Thursday, Ulta Beauty. So these are still consumer stocks like makeup and low-end consumer. So.
Okay, so what's really important this week is, again, we're expecting especially the first few days of the week to be more risk on. So that means more bullish, but that doesn't mean, rocket ship to the moon type markets. No, we're still having really low retail participation on trading. We're seeing institutions, not willing to hedge their bets as much. So really monitor the VIX and see if anything changes there, and create yourself if-then statements with the particular groups that are favored to perform. So what I would do is look at what ETFs are expected to perform the best for the week, and create your if-then statements around that. And for the lists, well, if you're unsure based on pre-market conditions, things like that, the neutral is often the way to go rather than picking a side in the market. So good trading everyone this week, and it's a nice full week with both the last trading day of the month and the first trading day and the first Friday. And just a reminder to go look at your first Friday of December seasonality and compare it with the first day of the month seasonality. Okay. All right.
Good luck.
Good trading, everyone.